If you've checked out our channel this week, you know that we are in the thick of first quarter earnings season. And well, things seem to be going quite well for the mid-tier and major names, save of course for Barrick. And while gold may be down on the day of us assembling this video, our latest target for coverage seems to be doing just fine, with the market rewarding their Q1 results with a 2% boost to their valuation, despite gold itself not having a very good day. All right, everybody, let's dive in. In case you totally missed the title on this video, our latest target is SSR Mining, who in the first quarter of 2025 posted top-line revenue of $317 million, reflecting revenue growth of 37% on a year-over-year basis from $230 million in the first quarter of 2024. Like virtually all the names we've covered so far this cycle, that growth largely comes from the price of gold moving upwards, with SSR Mining selling 104,000 ounces of gold equivalent in the first quarter of 2025 at an average price of $29.35 an ounce, as compared to 108,000 ounces of gold equivalent in the year-ago period at $20.61 an ounce. As has been a common theme as of late, the massive jump in gold pricing has masked slight production declines year over year. Cost of sales, meanwhile, increased from $126 million to $137, a 9% jump, while operating income improved from a loss of $376 million last year to a gain of $67 million this year. Results for the comparable period, however, are heavily skewed as a result of last year's Copler incident, which led to reclamation and remediation costs of $274 million in Q1 of last year, along with impairments of $114 million. In other words, SSR would have had to have a really screwed up quarter to have not post improved results on a year-over-year basis. Anyways, net income improved from a loss attributable to shareholders of $287 million or $1.42 per share to positive net income of $59 million or 28 cents per share in the first quarter of this year. On an adjusted basis, net income improved from $22.5 million or 11 cents per share to $62 million or 29 cents per share. In terms of cash flow, cash provided by operating activities improved from $25 million to $85, while free cash flow totaled out at $39 million. Cash and cash equivalents were down slightly versus year-end, coming in at $317 million versus $388 million at year-end, while working capital declined from $810 million to $765. The figures reflect the $100 million paid out by SSR Mining to acquire the Cripple Creek Victor Mine in Colorado from Newmont back in February. Moving to the operating data, SSR in the first quarter produced 104,000 gold equivalent ounces, which was a slight improvement over the 102,000 equivalent ounces produced in the first quarter of last year. Broken out, gold production declined from 80,000 ounces to 76,000, while silver production improved from 1.9 million to 2.5 million ounces. Lead production also improved, going from 10 million to 11.5 million pounds year over year, while zinc production fell from 1.2 million pounds to 758,000. Cash cost per equivalent ounce sold jumped by 10% year over year, going from $10.97 to $12.06 an ounce, while AISC jumped a disappointing 26%, ballooning from $15.69 to $19.72 an ounce. Excluding costs at Copler, which remains in care and maintenance, all-in sustaining costs came in at $17.49 an ounce, which still amounts to an 11% increase year over year. It should also be noted here that this was the first quarter with contributions from the newly acquired Cripple Creek Victor Mine, with the mine contributing 11,000 ounces of production in Q1, which amounts to the production from February 28th through to March 31st. On a site-by-site basis, Marigold saw production grow from 35,000 ounces to 39, while production at CB improved from 24,000 ounces to 26. The Puna operation, which produces silver, lead, and zinc, reports only a gold equivalent sales figure. However, it's the only operation where these metals are mined within SSR's portfolio currently, so we already know how it performed. The shortfall year over year, of course, came from Copler, which in Q1 of last year accounted for production of 22,000 gold ounces before the disaster unfolded. Things remain on track for guidance at SSR Mining, but that's not unexpected considering guidance wasn't released until March 31st, the end of the first quarter. Guidance this year is calling for production of 410 to 480,000 ounces of gold equivalent, which includes Marigold, Cripple Creek, CB, and Puna, and for obvious reasons excludes Copler. For comparison purposes, in 2024, SSR produced almost 400,000 ounces, just a hair under. So there's some growth expected, but not a whole lot. Cost of sales on those ounces are expected to come in between $13.75 and $14.35 an ounce, while all-in sustaining costs are slated to average out to between $20.90 and $21.50 an ounce. Excluding Copler, AISC is expected to be within the range of $18.90 to $19.50 an ounce. Exploration and resource expenses are guided to be about $58 million, while growth capital has been guided to be within the range of $100 to $140 million, the bulk of which will be spent at Hod Maden in Turkey, while initial earthworks and site access activities continue to advance and road and tunnel development begins. All right, so let's wrap it up. It was a decent first quarter for SSR Mining, at least on a comparable basis. But it's not like the comparable period was a challenge to beat considering the events at Copler. With that being said, SSR Mining isn't exactly a low-cost producer, despite having much of their operations overseas. They'll need to focus on cost containment moving forward here if they want to appease investors. All right, everybody, thanks for watching. Like I said at the beginning of this video, there are tons of earnings videos over on our channel, so make sure to check those out if you're into mining equity analysis. And guys, if there's stories you want us to cover, please let me know in the comment section. Thanks for watching, everyone.